Good morning, and not a great morning for markets as you've got two factors. Fed concerns, will they stimulate? Do they need to stimulate? I don't think so. But markets apparently rallied on that. Again, I don't think so. But I expect a reaction later in the day. China's banking regulator last night ordered the banks to transfer off-balance sheet loans onto their books and make provisions for any potential loans that could default. This is at least pressure for capital raising at Chinese banks. We've heard a bit about this. A number of the ratings agencies have been on top of this. But either way, Shanghai A shares down 2.3% last night, and a big reason why the world's feeling a bit of a hangover, even despite this Fed deliberation. Rest of Asia was off 30 to 70 basis points. As we look at the central part of Europe, this is where we're really getting a little bit of a sell-off. Russia off 1.9%. Pressure upwards on the dollar. The Dixie, we've talked about where it sits here, close to the 200 moving day, and do believe that not only has it retaken this morning the 200 moving day, but that actually it was oversold, and probably expect another couple percent here on the dollar, which is going to put negative pressure on commodities. And there's no question that people have had a pretty good run on the back of expectations that stimulus by the Fed or a second round, which may or may not be announced today, was giving commodity prices and all hard assets a pretty good bid. I'd say on the expectations for Latin America, one of the things we're seeing is that Brazil's really underperformed in terms of fund flows this year, despite the fact that the valuations have come in. Earnings have been fantastic. Credit spreads have come into record lows. 10-year aggregate yields in the local bond market are around 6.2, which would take you to all-time record lows. Some of this due to just global interest rates, which are lower. A lot of this due to an improved credit situation in Brazil. So watch that. I think the expectations are that you're going to continue to see inflows. Only 2% or 2.5% of the EM equity flows this year have been Brazilian, which compares to somewhere over 15% in 2009. Is a place where I think you can take a shot. The earnings that have come through have been fantastic. Another thing that's kind of on our radar screen is the Turkish banks. The banking data for July was very, very good, and we've seen a lot of people in this trade. It's been a popular trade, and Turkey's rallied to post-crisis highs in the last month. The loan growth is what's impressive. The high deposit growth is what's impressive. This is possibly the healthiest banking sector in emerging. And as you look at their neighbors around Europe, it's easy to see why Turkey can be a lot more resilient if we actually were to get another move down in credit expectations in Europe. That's it from here. Watch 2 o'clock Fed release. It's going to be a bit of a knee-jerk on reaction. Don't think it's going to be particularly pretty, but there's no reason to jump ship. Thanks.